So we have now what is expected to be a very heavy week for the U.S. markets, the Dow Jones, S&P, and Nasdaq, and crucial one because you have the big tech earnings on the cards. As you all know, that the major rally that has happened this year in the U.S. markets, in fact, the 73% of the returns in the half year of 2023 have been attributed to the what is called the Magnificent Seven, the seven bellwether IT stocks which have amounted for such a good return this year. They were falling last year on the back of rising interest rates, inflation being on the higher side, and now the story has changed because inflation is coming down, interest rates, expectations of a Federal Reserve cut. All this has helped, plus the more important productivity gains, the new sources of revenue emanating out of the artificial intelligence story, which is beginning to play itself out nicely. All this have been contributing to much of the gains for the Magnificent Seven. Now, things to remember this week is that Federal Reserve expected to raise interest rates once again. Many think this may be the last time, but there's also possibility of one more later. On the inflation front, Ukraine's bombing of the port city of Odessa in Ukraine, which is not a very good thing as far as grain prices are concerned across the world. Odessa, as you know, is one of the three main ports of the Black Sea in Ukraine, and they supply a huge portion of the grain output to the world. Another thing that you know is that the massive multiple expansion that has taken place in the US indices this year are, however, not commensurate with the earnings rise at the same time to justify the mega cap tech rally, as I would like to describe it. So all these are going to play in the investors' minds, and there may be a nervousness in the early part of the week, but that may fade away and there may be a resumption of the rally a little later. I believe that the upside has got still a little more steam left, and please play your game accordingly. But do remember that there are a multitude of factors that are beginning to appear, some of which have appeared this week, which may come to puncture the rally. The rally lacks the breadth. Russell and S&P have not participated commensurate with the rise in the Nasdaq. So the rally has to broaden, which it is not doing at this point of time. There was more than a $400 billion infusion of funds in the capital market in the month of March. It's not yet fully played itself out, but that has led to easing of the credit conditions and the reduction of the credit market spreads, and that has helped to a great extent. All this is going to change, however, as time goes by, and there is going to be what we call the effects of all the stimulus during the pandemic and also during the regional banks fallout in the month of March. All this is going to disappear shortly. In fact, there's going to be a fresh issuance of bills, treasury bonds, bills by the US monetary authorities, which will add pressure once again in the system and suck out liquidity. So there is also in the market what is called as a reflexive feedback loop. So all these put together, yes, the very short term, I believe that the markets will bounce back, but over the medium to long term, one feels that, or not feels, it's an analysis, and analysis says that a good correction is around the cards. To get to know where we are exactly headed from here, please do join our Prime or Prime Plus groups, which are focused on the US markets, the Dow, S&P, Nasdaq. And you also have, for those who are interested to invest in the Indian markets, we have the Premium or Premium Plus. And we have a combination package for both the US and the Indian markets. You can join that and know how long this short-term rally, which I still think is existing in some dimension, enjoy it while it lasts, but it's a short-term measure, and a nice correction is on the card. So when all that can happen, we tell people who have been continuously as a part of our Prime or Prime Plus groups, number to get in touch, 982-086-1044. Have a great investing week ahead. Take care. Bye-bye.